Welcome to Cut to the Chase. Today is Wednesday, the 19th of February. I'm Daniel Lam, your host for the podcast. Long-term listeners of this podcast would know that my favorite asset class is Forex. Because as a chess player, I value logic, which is usually very well expressed in the FX asset class. Now, yesterday I spoke about the weakening US dollar very briefly. Well, today I want to dig deeper into the key drivers. So the widening US budget deficit is capping the dollar's potential in the medium term. It also boosts inflation expectations, which pressures real yields lower. Meanwhile, there is support against downside risk because of US economy's relative outperformance and the dollar's safe haven appeal, which attracts buyers during geopolitical tensions or recessionary fears. Now, capital flows into equities and bonds also supports this range-bound outlook. But these flows are vulnerable to shifts in real interest rate differentials, and the positioning for the dollar is stretched. And that's especially so versus the Japanese yen. Why is that? Well, the Bank of Japan is the only major central bank that is tightening rather than easing. So preliminary estimates of the fourth quarter real GDP growth in Japan was stronger than expected, rising to 2.8% Q-on-Q annualized from 1.7% in the third quarter. Domestic demand remained strong, and the GDP deflator increased to 2.8% year-on-year. Now, Japan's economy is running hot. That's sustaining price pressures for the first time in decades. Stronger inflation reflects a robust labor market where labor demand remains greater than supply, keeping wage growth at levels not seen since the 1990s. So the Bank of Japan maintains a hawkish bias, having raised its inflation forecast after hiking 25 basis points to 0.5% at its January meeting. Technically, the dollar-yen is in the bearish territory, with MACD turning negative, i.e. yen strengthening, and in fact gaining in strength, judging from the rising ADX index. So this pair is likely to test the support at 149 soon, which more or less correspond to DXY's critical support level at 106. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.